Cryptocurrencies have always been a bit of a controversial and polarizing topic in the financial world, but whether you like them or not, it seems like they are here to stay. With the emergence of Bitcoin spot ETFs and the new Ethereum ETF, the crypto space is certainly starting to grow even more. Now here's the question. Should you maybe be thinking about adding crypto to your portfolio? We'll stay here and we're going to talk about that right now. Mike, thanks for coming back and joining me. We had you here a couple months ago when the Bitcoin ETF launched, and now we're just on the heels of the Ethereum ETF launching, so good to see you.
Great to be back, Anthony. Yeah, 6 months, and here we go,
And it's
another set of products.
Yeah, and look, we've already talked about this. The Bitcoin ETF launch was the most successful ETF launch in history.
Yeah, it was.
Yeah, insane, right? So here we are 6 months after that. Ethereum launches, and not quite at the same level as what we saw with Bitcoin, but certainly pretty successful nonetheless. Maybe you can give us a little refresh on how we got to this point, sort of the advent of ETFs within the crypto space, because before 2024, where there was no spot ETF, everybody was buying the crypto itself, but things have changed.
Yeah, so it's been a bit of a long road getting here. The first applications for an ETF that tracks spot Bitcoin prices was actually submitted over 10 years ago, so a decade in the making. As you mentioned, back in January, we got approval for the first spot Bitcoin ETFs, and today, July 23rd, was the first trading day for spot Ethereum ETFs. There are a number of different products that are and have been trading now. But yeah, it's been a long road. So kind of how did we get here? I think it's helpful to kind of look at it from the regulatory perspective. So there have been concerns about the underlying market, whether it's deep enough, liquid enough, regulated enough. Those concerns were basically fundamental to causing the applications to continually to be denied or to be pushed out. Now, once the SEC basically last year was told in a court case, not going to get into those details here, but they were basically told that they have to approve a spot Bitcoin ETF because it tracks the same market that the futures products track, and so they can't treat those two differently. And so that same logic applied for the Ethereum spot ETFs. There's already that futures market that's regulated, so that same logic holds here. So now we have our first two spot crypto tracking products here in the US.
There's something like, investors now can access something like 70% of the liquid crypto asset market through these ETFs. That's an incredible number.
Yeah, well, and that goes to show kind of how dominant those top two really are. I don't have the numbers today, but it's probably about 2/3 between those two of the total cryptocurrency space market cap. Yeah.
Those were the ones that I remember hearing about first when the crypto craze just was bubbling up, as we said.
Yeah, it was kind of like Bitcoin, call it, the original, and then Ethereum was kind of, the little brother, the next up, and then, after that, they kind of really expanded out with plenty of others.
So it seems like there are some fundamental differences also within each separate ETF group. So Bitcoin versus Ethereum. What are those differences? Because for people watching, I think they should know there's some nuances here.
Yeah, so before we get into that, let's take just one step back. The difference between owning something like a Bitcoin or an Ethereum ETF and the actual underlying crypto. So when it comes to something like the Bitcoin ETF, it should track the price of Bitcoin very closely. The one caveat there is that when you do hold that ETF, you have to pay fees to the ETF provider that runs all of their back office administration. So over a long enough period of time, you may start to see some divergence where the value of the ETF would be a little bit lower than the price of Bitcoin just because of those fees and expenses. So that's kind of on Bitcoin side. And there's another caveat when it comes to Ethereum. So Ethereum ETFs are, now that they're trading, they have been, they did not get approval to participate in what is known as staking. And staking involves basically locking up your existing Ethereum holdings to the Ethereum blockchain to help facilitate transaction processing. And when you do that, you are paid effectively a yield in the native currency, Ether. And so that yield is something around 3% today. So these ETFs don't allow for that. So that's a potential additional return that you could have earned if you held the underlying and you staked it versus holding the ETF. So you, over a period of time, you might see a larger deviation in price between the ETF and the underlying. Yeah, so it's a little quirk of the way that it's structured. Yeah, the SEC has determined that the staking itself constitutes an investment contract, and they're not comfortable with allowing that today. So
lawyers probably are going crazy on these things, like trying to figure out how to make it sure that it's regulated properly and that people aren't getting into a product that could potentially cause some serious financial damage. So yeah, I'm sure this wasn't easy to bring. You said the first time somebody tried to bring it to market was 10 years ago.
Yeah, that was for the Bitcoin one, but yeah, it's always been complicated.
Right,
yeah.
And that was before anybody probably knew anything about Bitcoin. Certainly people weren't talking about it, but the craze kept going, and so we went down this road. So clearly you can't really talk about ETFs or any exchange-traded products without talking about the regulators. Yep. And now that Bitcoin and Ethereum have gotten into that pool, they have to kind of play along with everybody else who is officially on the exchanges. And so how do you see the regulators kind of working with these ETFs, now over the next 12 months? What does the space look like on the regulation side?
Yeah, no, that's a really good question, because that's going to be critical for the space. I think overall it still has, and pretty accurately so, this reputation as kind of a Wild West. That's what they need more than anything, is regulation, clear guidance. Unfortunately, up to this point, the SEC has taken the approach of kind of regulation via enforcement. So they haven't been entirely willing to work with all of these different, firms, upstarts, whatever it may be within the industry, to try to find, a healthy balance that will provide a regulatory framework that will allow, these projects to, to expand, to continue to grow. So, naturally that's a little bit chilling to the ecosystem.
Sure.
I like to think about it, using a metaphor with like a plane trying to land at, a crowded airport. The plane is the cryptocurrency ecosystem, and air traffic control is the SEC and regulators. And the air traffic control says, come on in, we're ready for you. Landing strip number 1's wide open. And the pilots on the plane, that's not long enough. This is a big plane. We can't land there. And so this plane is trying to put itself together, make itself smaller in midair while it's in a holding pattern, and trying to get air traffic control to divert it to another runway that has more length. But it's just really hard for them to kind of find a common middle ground. So hopefully, in the coming months, we'll get to some point where either the plane's going to be small enough and it's going to fit onto runway number 1, or air traffic control is going to divert it to another runway that makes more sense for a plane of that size. Looking forward, of course, we have, pretty consequential elections coming up here in the U.S. in November, and that could cause some major turnover in terms of regulatory both agency and in terms of what actions the incoming administration will want to take in regards to the crypto ecosystem. So I don't really want to put out any kind of speculation at this point.
Yeah, I mean, it seems like at this point you just described a very harrowing situation with a great example of such a thing. And so it seems like the regulators would probably say, you know what, we're good right now with these two. Let's let that be this for a while. Let's see how this goes. Certainly bringing any other ones to market seems like it might be unlikely, certainly in the next 6 months or maybe 8 months or something.
Yeah, and like we said, between Bitcoin and Ethereum, that represents about 2/3 of the total market cap.
Right.
So, in terms of what's the next logical step, after Bitcoin, Ethereum, it made some sense. That would be the next largest one. But after that, it kind of drops off a little bit, and so you're starting to get into more niche, kind of projects and cryptos there.
I mean, you're looking at that chart. You're looking at 1.3 trillion for Bitcoin and about 400 billion
a little over,
for Ethereum, and everything else kind of pales in comparison. Exactly. Good stuff. Let me just ask you one more thing, Mike, before we wrap up. How should investors be thinking about this? Because clearly people are tuning in because they are interested, perhaps, in looking into some of these ETFs, whether it's Bitcoin and now Ethereum. How should investors be thinking about this when it comes to their portfolio?
Yeah, so this is going to echo a lot of what we spoke about back in January, which is, anything that you are looking to invest in this space, you should be fully comfortable losing it entirely, because that is the risk case here, that it goes to zero. And in the meantime, if it doesn't go to zero, it's important to recognize that these assets are unbelievably volatile. Not only do they go up and down in much larger swings than equities markets typically do, they tend to have long periods of drawdowns. So if we compare the S&P 500 kind of after COVID-19, it fell 20, 30%. And then we also take a look and kind of do an apples to apples comparison of Bitcoin and Ethereum prices from their 2021 peaks. We'll see that the S&P is back to new all-time highs in less than 5 months.
Right.
Bitcoin, meanwhile, took 28 months, I want to say. So yeah, almost 2.5 years to hit a new all-time high. And Ethereum's still about 25-30% below its all-time high, almost, what are we now, 3 years later, nearly. So
yeah.
Unbelievably volatile. So from the Chief Investment Office's perspective, some of those outsized gains that we saw, 10 years ago in this space, they're less likely to happen now, and it takes, a lot more risk to get there. So we recommend checking out other alternative investments to either enhance portfolio returns or improve diversification. So the top 3 things that we're looking at right now are low correlation hedge funds. These tend to do a great job of protecting portfolios when interest rate expectations are changing, which is pretty much
expecting.
Yeah, it's the defining theme of this year.
Right.
Another thing that we like right now is private equity. Valuations are really starting to find a bottom. Deal counts are still below all-time highs in U.S. dollar terms, but the actual number of deals being done is really picking up steam. And then finally, we do see opportunities in private credit. Specifically, we like those with stronger fundamentals, so kind of your upper middle market, your sponsor-backed loans. Those are the areas that we like there. So the real risk here is just that it goes to zero. So that's why we continue to say, it's absolutely critical that you don't invest more than you are comfortable losing completely, because risk case, everything goes to zero.
That's great. I mean, I just chatted with 2 of our colleagues, Dan Scansaroli and Sean Sanborn, about hedge funds, and how you kind of sort of defy the traditional 60-40 portfolio by putting alternatives in there. So there's clearly, and that's a tried and true market that we like. And so, we always say on these shows, and you've heard me say this 1,000 times, make sure you're talking with your financial advisor, because he or she will let you know what your risk profile is and what you should and shouldn't be doing in your own portfolio. But it's always good to know and have the information at your at your disposal when you're having these conversations. But it's always good to hear. People love crypto; they love talking about it. So
yeah, it's a fun topic.
Good party talk.
It's a tough investing environment.
And as you said, volatile and still pretty risky.
Yep.
Mike Gord, thanks very much. Good to see you.
Great to see you too.
Thank you, sir. Fun. And for more information on anything coming out of the Chief Investment Office, including what we talked about today, even hedge funds, you'll actually watch that show, which you'll be releasing on this website shortly. You can visit our website at ubs.com/views. Plus, you can follow UBS on all of the social media channels, including Instagram. Follow us at UBS Trending. Lots of studios content there for you. And as we said, please make sure you're continuing this conversation with your financial advisor. Until next time, I'm Anthony Pastore. We wish you a great rest of your day. And remember to keep your eyes on what's trending, everybody. We'll see you soon.